Welcome to the top 5 technical indicators for profitable trading. By the end of the video, you'll have a good understanding of how people use technical indicators to trade with the examples we provide. Technical indicators can be very confusing and daunting for beginner traders. They don't have to be, and in this video I'll give you a basic understanding of the most useful technical indicators to help you make profit in the markets. Firstly, all the indicators we are going to show you are all created from basic candlestick data. They all take their information from the basic price action, the open, high, low and close data. If you need to learn more about the basics of candlesticks, then please click here and watch our 3-part candlestick series. Here are some of the most common mistakes traders make with technical indicators. Don't overload your screen with indicators. Only display the indicators on your charts that you'll actually use. A lot of traders overload the charts of indicators as an excuse to overtrade. Remember, indicators are an indication of something happening in the market. They aren't a crystal ball trying to predict the future. Don't blame the indicators when a trade doesn't work out. No matter which indicators you use, you will still need to take losses in trading. The 2 types of indicators. There are 2 main types of markets, trending and range-bound or sideways markets. A trending market looks like this, where the market is moving in one direction. A range-bound or sideways market looks like this, where the market is moving up and down within a specific range. Indicators tend to be suited to either trending or range-bound and sideways markets. Indicator 1, RSI. The Relative Strength Index compares the magnitude of recent gains to recent losses in an attempt to determine overbought and oversold conditions of an instrument. As you can see from the chart, the RSI ranges from 0 to 100. An instrument is deemed to be overbought once the RSI approaches the 70 level, meaning that it may be getting overvalued and is a good candidate for a pullback or reversal. Likewise, if the RSI approaches 30, it is an indication that the instrument may be getting oversold and therefore likely to reverse. Traders will often use the RSI either coming back out of its overbought or oversold areas as a signal or partial signal to enter a trade. As we can see, the RSI is often accurate when indicating when a market will reverse. A trader using RSI should be aware that large rallies and drops in the price of an instrument will affect the RSI by potentially creating false buy or sell signals. Traders often combine the RSI with other indicator signals such as MACD crosses. Indicator 2, MACD. The moving average convergence divergence is one of the most well-known and used indicators in technical analysis. This indicator is made up of 2 exponential moving averages which help measure momentum in an instrument. These moving averages and the changing distances between them become the MACD. Convergence simply means the moving averages are moving closer together, and divergence simply means they are moving away from one another. When the shorter term moving average is above the longer term moving average, this area of the indicator will show activity. When the shorter term moving average is below the longer term moving average, this area of the indicator will show activity. The centre line, of which the MACD is plotted around, indicates where the moving averages are equal, and when the MACD passes through the centre line, this indicates the moving average is crossing. The signal line, here in red, is a moving average of the MACD values themselves. Typical values for the MACD are 26 and 12 exponential moving averages and 9 for the signal line. The farther apart the moving average is, and the greater the momentum, the farther away the MACD will be from the centre line. Traders use MACD and signal line crosses, such as these, to indicate momentum trades. You can see how these crosses often match up with market moves. Traders also use the MACD crosses to indicate when momentum is coming out of the market, and may use it as a signal to exit a trade. Indicator 3, Bollinger Bands. A Bollinger Band starts off with a simple moving average. It then has 2 standard deviations plotted away from it. That sounds a mouthful, but the important part is because standard deviation is a measure of volatility, Bollinger Bands adjust themselves to current market conditions. When the markets become more volatile, the bands widen, move further away from the average, and during less volatile periods, the bands contract, moving closer to the average. The tightening of the bands is often used by technical traders as an early indication that volatility is about to rapidly increase, as volatility often follows periods of lack of volatility. The markets spend most of the time within the bands, and when the price action reaches the edge of the bands, it is often more likely to reverse and come back into the range. This is used as a signal by reversal traders to take a trade. This is similar to the oversold and overbought conditions of the RSI. Indicator 4, Super Trend Indicator. The Super Trend Indicator is an excellent indicator of trend direction. It can be used as a foundation of a trading system that is based on trend following. One of the most popular ways to use this indicator is to enter the market after a pullback. For example, if the market is on a downtrend, indicated by red, wait for a green pullback and then re-enter the market once it turns red again. The same can apply in uptrending markets. Here we can see how this indicator accurately tracks market trends. It can be refined through the settings to match the specific instrument. Indicator 5, Confluence. The last indicator isn't a new one, it's indicator confluence, which means to use multiple indicators and their signals to take a trade. Here we have the RSI and MACD we looked at. We have the RSI moving into overbought territory here. Remember that indicates the market will reverse. However, we want to help us filter out false signals on the RSI, so we also look at the MACD to give us confluence. We can see it is indicating the momentum has come out of the market, as far as the market rallying or going up is concerned, and we have an MACD cross here. A signal to enter this short trade could be waiting for the RSI to come back out of the overbought and also waiting for the MACD cross. We can see that those combined signals are an indication that captures this trend. You can also use the opposite signals to indicate when the momentum is coming out of the market and it's more likely to reverse and the market to retrace back up the opposite direction of our trade, and therefore is an exit signal. In addition to the RSI and MACD signals, we can add further confluence to this trade with a Bollinger Band and the super trend indicator. We can see the market has hit the top of the Bollinger Band here, but we could also wait for the super trend indicator to change red here before taking the short trade. So now we have the confluence of 4 indications. We have an RSI coming back out of overbought, we have an MACD cross, we have the market going to the edge of one of the deviations on the Bollinger Band, and we also have the super trend turning back to red. This is the sort of confluence you should be looking for with technical indicators on various markets to see how you can find opportunities to take profitable trades. There are hundreds of indicators a trader can choose from. The 5 we've spoken about are the best ones to develop trading strategies from. Take note how the indicators work with certain market conditions and see if you can see patterns in the market. Thank you for watching. If you'd like a free 30-minute consultation with a professional trader to talk about how you can become a professional trader, click here. To join our live trade room for free, where you'll watch our professional traders take profitable trades, click here. Our next free trading strategy training webinar will be coming up soon, so make sure you sign up by clicking here. Subscribe to our channel to get access to our free weekly trade planning session by clicking here.